Grand Theft Auto 6 finally has a concrete launch date, and Take-Two CEO just casually slapped an $8 billion guidance tag on its shoulders.
Yeah, no pressure at all. Just, casually carrying the entire global gaming economy next year.
Seriously. Welcome to Earnings Unscripted, everyone. It is May 21st, 2026, and today we are looking at Take-Two Interactive, ticker TTWO. I mean, it is just a fascinating Q4 to dissect.
Right. And quick legal disclaimer, everything we discuss here is strictly our personal opinion. This is not financial advice, so please do not take out a second mortgage based on our banter.
Please don't do that. But hey, if you were watching the tape, investors got some massive relief today. The stock had a pretty brutal quarter leading up to this. It basically slid 25%. But right after the bell, it just spiked up over 7%, hitting around $254.
Well, certainty is a hell of a drug for markets, because the actual Q4 numbers, they were kind of a mixed bag. I mean, net bookings came in at $1.58 billion, down about 10% from the Q3 holiday peak, but importantly, that beat the top end of their own guidance range.
Right, and the bottom line definitely looked cleaner. Operating income actually flipped to a positive $10.9 million. That's a nice recovery from that ugly $38 million loss last quarter. Plus, the net loss narrowed down to 32 cents a share.
It looks cleaner on the surface, yes, but if you look under the hood, total operating expenses dropped by almost 6% sequentially. Management admitted a lot of marketing spend just shifted out of the quarter. So that operating profit, it is partly just a timing trick. The bill is still coming.
Oh, always the skeptic. That is a fair point, actually. Though you have to give them credit for how sticky their live services are right now. Recurrent consumer spending was 82% of total bookings.
Exactly. That is the real safety net. They are floating a $1.68 billion GAAP net revenue quarter almost entirely on older titles. But the interesting thing is their strategy with new frontline releases while they wait for GTA.
Yes, I love what they did with Mafia: The Old Country. Instead of pushing that standard $70 price tag everyone complains about, they deliberately priced it at $50.
Which makes total sense because it's a shorter narrative game. It's not a 100-hour experience.
Exactly, and it became a massive hit. It proves gamers will absolutely buy premium software if the pricing matches the scale. They basically proved price elasticity is alive and well in an industry that loves to overcharge.
It's rare to see a studio leave $20 on the table to preserve goodwill, but it worked. The catch here is that their mobile division, Zynga, is actually being guided down for next year. Gravity is finally catching up to those aging mobile games.
Right, so there are definitely some stress fractures forming beneath that massive $8 billion headline. All right, let's get into the details.
Yeah, those fractures are exactly why their margin story is so interesting to me right now. I mean, usually when a company needs to squeeze out profit, they start firing developers. But Take-Two is doing this weirdly elegant end run around external costs. Did you catch the anecdote Zelnick told about their marketing team?
The AI ad agency thing? Yes, that was honestly wild.
Right, because a lot of analysts are terrified that AI is just going to nuke headcount in gaming. But he completely flipped that narrative. He was talking about these live-action marketing spots that usually cost them like $25 to $100,000 through a third-party agency.
Just for a 15-second spot, probably. Because you have to hire the agency, do the shoot, pay the actors. It adds up fast.
Exactly. But this time he said, and I wrote this down, the AI software was used. The entire cost of making the spot was $0.
Wow.
Zero. And it was done internally by a team of just 2 people. So they didn't fire anyone. They just insourced a 6-figure external expense down to literally nothing, just using generative AI.
Okay, so that is actually a profound shift because the whole scary tech narrative right now is that AI replaces the human. But here, it's just replacing the vendor. It is like deflationary AI without the body count?
Deflationary AI. That is a really good way to put it. Because if you think about their operating leverage, the CFO mentioned margin improvement is their largest opportunity. And when you're about to market an $8 billion beast like GTA 6, taking your video production costs to $0 is a massive, massive lever.
Right. And they are keeping more of their ecosystem in-house, too, like the thing with 5M.
Yeah, exactly. The modding framework.
It used to be this almost like a rogue third-party community, right?
Because it is a huge monetization vector. They are basically making sure that whenever players are engaging with GTA, the money stays inside their own walled garden.
Okay, but speaking of that walled garden, let us be real for a second. If everyone on the planet is playing GTA 6 next November, who is buying anything else?
The cannibalization argument.
Yes, I mean, if I'm dropping, 70 or 80 bucks on GTA and spending 200 hours in it, I'm not playing Zynga poker. I'm not buying NBA 2K. Doesn't this one massive hit just vacuum all the oxygen out of the room?
Logically, you would think so. It's a zero-sum assumption about time. But Zelnick explicitly pushed back on that. He flat out said cannibalization just does not really apply to the entertainment business.
Wait, no, that's not quite right. Time is finite.
Sure, time is finite, but attention is elastic. His argument is that history shows massive hits actually energize the broader consumer base. It wakes up lapsed gamers. So instead of stealing from a fixed pie of players, a massive launch basically drags millions of people back into the ecosystem who, haven't touched a console in 3 years.
Oh, okay. I see. It expands the pie. They show up for the huge cultural event, but then they stick around and, I don't know, maybe play a mobile game on their commute or check out the new Mafia title.
Precisely. Zelnick even said, having spent a long time in every entertainment business, hits cure all ills. He's betting that the gravitational pull of GTA lifts the tide for the entire catalog.
Hits cure all ills. That sounds like something an old Hollywood studio boss would say. But it does make you wonder if they're leaning a little too heavily on that one magical cure.
They definitely are, but when the cure is, arguably the most anticipated piece of entertainment ever made, you can kind of forgive the hubris.
Fair enough. Okay, so we have insourced AI marketing saving millions, and this big bet that cannibalization is just a myth. So where does this actually leave their balance sheet heading into next year? What should investors watch while they wait for November?
Financially speaking, they are essentially building a fortress for that exact moment. The CFO was pretty explicit about it on the call. He said they are forecasting operating cash flow in excess of $1 billion, and they expect to be in a net cash position by the end of fiscal 2027.
Okay, so wait. A net cash position with $1 billion in operating cash? That is a massive war chest. Are they just gearing up for more mergers and acquisitions?
Most likely, they mentioned being armed for strategic, accretive M&A. But look, before we crown them the kings of capital allocation, the bridge between now and November 2026 is slightly precarious.
Because of the mobile division shrinking? I think I saw that in the notes.
Exactly. Management is actually baking in a downward trajectory for Zynga next year. The legacy mobile titles they are aging out, and there's not an obvious replacement yet. Plus, capital expenditures are jumping to around $200 million. They are spending heavily on game tech just to get to the finish line.
So it is kind of like the foundation is sinking just a little bit while they finish building the penthouse.
Right. That is exactly it. The general cost of making these games just keeps creeping up. So that $8 billion guidance is not just a goal, it's almost a requirement. If the launch slips even a quarter, or actually even a month, that beautiful operating leverage unwinds really fast.
That makes complete sense. It really is a completely binary outcome at this point. It feels like the entire gaming sector is basically holding its breath until November 19th.
We all are. I might actually take the week off.
Oh, please. You're just going to be analyzing their live server stability reports while I actually play the game.
You know me too well.
I really do. Let us go ahead and wrap it up there for today. If you want these earnings drops to just naturally show up in your feed, it is probably easiest to just follow the show. You have been listening to an AI-assisted podcast, which is really an experiment to see how well machines and human curation can piece together a cohesive audio story. We would absolutely love your feedback or any ticker requests over at earningsunscripted@datamadness.ca, or you can just grab the X link in the show notes. Thanks for spending some time with us.
Catch you next quarter.